And traders, we are live. And wish it was the morning so we could trade. It is not, unfortunately. We can go back. Look at some trades, figure out what we would have traded, in hindsight. But how are we doing, guys? Friday night live stream. This is going to be a typical kind of AA meeting style. Like I said earlier, we're going to have a celebration as well as bring your burdens AA kind of meeting. So Mr. James has already sent me his chart, his equity curve. So we're gonna review that with his permission in a little bit. But while we got some guys, joining on in, we're just gonna hang out, chat. I got a little bottle of an allocated. It's actually allocated in North Carolina. The very old Barton. It's like a cheap Buffalo Trace, is what I've heard. So I've been trying it, although it's very peppery. It's like very peppery. It's pretty. I mean, it's got the traditional notes, but they're kind of subtle in relation to that heavy pepper note. But that's what I'm sipping on tonight. Let me know what you guys are thinking. James, absolutely, we can go over the chart. Oh, I can't wait. I can't wait to dive in, James. We got MG here in the build too. MG, how did your week go? I know you got 2 funded accounts, MG. Thank you. Here's the chart for this week. I don't want this to all be about me, so you guys let me know. I want to know. I got James' chart. MG, how are your charts looking? I was looking for more progress today, but I'll take it. I'm really satisfied with the equity curve. Now is the time, guys. Now is the time for the green team to shine. And I'm actually doing what I teach. Wow, I'm surprised. Sometimes emotions get the best of me too. I always say in trading, you never make it, you're always making it. There was an ad that used to go around on YouTube. I mean, good stuff. This was just... They're no longer around anymore. But they would say, you're just one trade away. Some of you have heard me talk about this before. You're one trade away. And I always heard that and would think, oh, one trade away from what? I mean, they're trying to sell. They're trying to sell their chat room, but of course they're saying you're one trade away from being a consistently profitable day trader. When in fact that's... For those that know anything about trading, they know you are... If you're one trade away from anything, it's a train wreck. That's what you're one trade away from. Not turning magically into a profitable day trader. It's that takes work on every single trade. And this week I was so dialed in, and I think that's why my equity curve looks like this. What I was dialed in on is a couple things. But the most important thing, in my opinion, that I've been dialed in on, this is over 9 trading days. What I've been so focused on is not finding the perfect setup. You're like, what, Kevin? The edge is what you're supposed to be finding. No, what I've been focused on is myself. I've been focused on knowing exactly what I'm going to do, regardless of what each individual ticker does. I've been finding reasons for trades not to work out. I've been getting involved with them. I'm not like convincing myself not to take trades, although I am partially. That before I ever get into a trade, I'm saying, why would this trade not work out? Don't just think profits. We're not just spinning the wheel. Don't just think profits. What we're thinking of is what are some reasons why this trade may not work out? I like to predefine the risk before I get into the trade. So those are some things I go over. Why could this trade not work out? And then apply a few things. Okay, so I'm going to go over 4 points for you guys real quick. And again, this is what I love, guys. I mean, I love the brotherhood we got going on here. I mean, I so desperately want to see all of us successful. And I think we're growing together. I think we really are growing together as a team, and I love seeing it. I mean, I love trading. I love coaching. So this is the wheelhouse right here. There's four things though. So people put too much emphasis on strategy. I'll tell you what's going to. I say a lot of things that are contrary to popular opinion. You guys are aware of that. The greatest enemy of a good trading strategy is the dream of a perfect trading strategy. The the greatest enemy of a good trading strategy is the dream of a perfect trading strategy. Okay, so here's what I've been focused on over the last 9 trading days. I've been focused on sizing. Sizing has been everything. Sizing has been everything. So the edge presents itself, but I'm not tunneling in and marrying any ticker. I'm not so focused on the edge. What I do is I take the trade, but I embrace the risk and accept the results. Embrace the risk. Okay, so what does that mean? Traders think they're risk takers because they day trade, but not really. I mean, most traders, when they get into a trade, especially newer traders, they have expectations. They have expectations that they should make money on this trade. They're involving themselves in this trade. This trade owes me money. I need a participation trophy in the form of profit. For involving myself in this risk, I need to reap the favorable outcome. That is profit. So the market will humble you to the point where you're going to say, you're going to get to this point, I have no idea what's going to happen on this trade. I'm taking a profitable setup. I'm taking the edge, but I have absolutely no idea what's going to happen on this trade. That doesn't sound like, a good way for me to sell anything. That's why I don't really. That's why I don't have a chat room. That's why I don't sell anything. I don't know what's going to happen on this trade. That's what you have to say. I don't know what's going to happen. I know there's a positive expectancy on this, and that's why I'm involving myself in this risk. But I have to tell myself I don't know what's going to happen. Embrace the risk, accept the results. Okay, so the 4 points are. Let me just get through this before I get on to another rabbit trail. Okay, so your edge provides you with potential. The edge provides you with potential. And then what's next? You have a few things. You have risk management, position sizing. So that unlocks the potential. Discipline is what unlocks it. Strategy gives you potential. Discipline unlocks it. You have to have such good discipline. And honestly, what I've seen from every blow up, pretty much every blow up in history, all the blow ups I've seen, and I've seen a ton. Okay, if you want to talk about blow ups, I can talk to you about blow ups because I've seen them for myself and from so many traders. So I'm an expert on the blow ups. It's never the strategy. It's always the lack of discipline that blows up traders. So you have your strategy, you have your edge, that's great, but that's not the entire focus. The focus is you need great discipline to unlock that strategy. Then risk management is what protects it. Good risk management, good position sizing, and then consistency compounds it. All right, I'll catch up now. I'll quit my rambling. MG, my chart's only 4 trades this week. Small profit in total this week, but 100% win rate. From next week, I will increase the share size. Very good, MG. I love your discipline. So MG takes MG's trade. He has his trade that he takes in pre-market every morning, and usually is there every single morning. This morning was the KCMR or whatever the ticker was. It was a great setup, hit $10, and honestly gave a sloppy seconds entry too, and then faded all day. So MG is very disciplined. The discipline is what we're speaking on to unlock the potential of the edge. James, break even week for me. I guess that's better than blowing up. All right, so James, you ready to dive in? We just went over a lot. Guys, thank you for being a listening ear in here because, yeah, KMRK. There we go, KMRK. Because, I can ramble forever. This is my love, trading. My love and helping you guys out. KMRK all the way down to 219 was the bottom, bouncing off the magic 20 cent area. Shoo! KMRK was a beauty. That was a beauty. This is what MG hit, and he's hitting one of these every single morning. And this is MG's edge. And otherwise, he's just kicking back, hanging out. All right. So let's get into not just my equity curve. Let's look at James' equity curve. So he sent it for us to review on the night. Let's take a look. So break even on the week is James. Here's your equity curve right here. You got a risk reward 1 to 0.8. Success rate 57%. So you are seeing over 50%. Nice. Gave back half your profit by the end of the day. All right. So, James, when I first saw this equity curve, I'll be honest, I thought it was a heartbeat. I thought I was looking at a heartbeat monitor. This thing is a little up and down. You're seeing more success on your trades at the 57% success rate. But what it looks like to me is random position sizing. Okay, so we went over. Clearly we can agree we got to clean this up a little bit, right? So you're sitting break even. How do we clean this up? I'm not saying your trades are necessarily poor. You're seeing a decent success rate. It just looks like the position sizing's a little whack. So we got the edge. We need the discipline to unlock it. So the discipline, we're going to make sure we're not blowing up on this eval. And then risk management to protect, the profits unlocked by that consistency to compound it. So what you need to do is probably keep a consistent sizing. If you want it to look like more like this, where you're just like slowly trending up, what you're going to want to do is you're going to need to keep consistent sizing. So no falling in love with any tickers. Just keep the sizing consistent. Even if you like one ticker over the other, keep on a $5,000 account. I don't entirely know what sizing that is, but let's just say it's $1,000 position. Divide that into the shares, and into the share price to get your shares. So, and I don't know if you're scaling positions either. But yeah, what you're going to want to do is probably you're going to need to the sizing looks a little random. And if you've heard me say this before, I've taught this plenty of times. Random sizing is going to equal random results. And I believe that's what we're seeing here. Random sizing equals random results. All right, so 57% success rate, not terrible. Sizing's a little over the place, so just keep it consistent on the sizing across the board. You'll see me like today. I apply, it'll be this. No matter what the ticker is, it's going to be the same exact risk per ticker, which isn't. There are certain hands that may deserve a little bit more risk than others. Like, for example, the CYCC. Like this hand, like right now, even looking back at this, I'm kicking myself because I literally said I'm going to size this up to Tuesday's high. And I should have made a ton of money on this trade. I got scared out of it, though. It was moving so much. it was, the volatility was, I mean, it was moving like a point at a time, up and down. I kind of got scared out of it. I'm just kicking myself for that. Why? I sized appropriately on it. I think I was trying to top it instead of just sizing up to that point. Size up towards 19, 10. I mean, I literally said that this morning, 10, 10, 10, 10. Why did I not do that? And then just kick back with it against Tuesday's high. That's exactly what I was calling for. So some mistakes were made, today, that being one of them. But yeah, this one felt like it deserved a little bit more risk because of the nature of how it was trading. Of course, you got to size down. I wanted to keep the risk relatively the same. But, the reason I say that is we don't know on an individual trade-by-trade basis what ticker is going to work and which one's not. I've gone over many times how trading, you can have hands that are like a pocket pair ace hand or pocket tens. You have hands that some trades are a little bit better than others and deserve more risk. So I've gone over that. But that takes a while to develop. I'd say just try to size them all consistently to smooth that out with your risk, consistent sizing and consistent risk. Oversizing, too confident. Yeah, eliminate the confidence. Eliminate that. I mean, you want to be confident enough to put on the trades, but you gotta. But the confidence can be bad too. Confidence can be bad in trading. Pre-market's been rough for you, so avoid it. Yeah, avoid that. MG only trades pre-market. MG does great. Only trading pre-market and does an excellent job with pre-market. But yeah, I mean, size it back a bit. I mean, size it back a bit too. Let me see. So you're swinging. Yeah, you're trying to. You're up to like 52, near 5,300, back down to 4,900, back up to 5,300. So yeah, you're swinging a little much for the 5,000 account. I mean, like the quota on that 5,000 account should be like. Should be like $50 probably on the day. That's what you should be aiming for and sizing for that. Sizing literally for like $20 profit a trade. And that does not sound sexy, but that's probably what it should be. When you size down, you stop trading your fears anyways. You start trading more of the edge, more of how you know how to trade. But yeah, thank you for sending that chart. That's excellent. I like going over it. I think there's a lot to learn from it for yourself and others, for sure. But traders, yeah, today was a little aggravating. I mean, the week entirely was really good, and today there were several good setups. This TLO, I've like revisited in my mind so many times. This little ascending triangle here where we have higher lows forming, and it just accumulates shorts, traps them, and then we dump off of the magic 20-cent area, 320. Heavy, and you could tell how heavy this thing was, and just sold off a point off of that. So bullish patterns actually turn bearish when a ticker's up multiple hundreds of percent. That's the nature of it. And then BZAI, this one I caught short on a bear flag. It grinded all the way back up to about the magic 520 cent area before pulling back in a little bit. And then BTOG. BTOG, this was on a day 2 climb, and we were waiting in chat for the dollar liquidity sweep. Literally happened and didn't take it. Kicking myself so much. So dumb that I wasn't there for that. So yeah, I was trading a little fearful today. Honestly, I wanted. I knew the entire week was green. I'm like, I want to end the week all green. I think I was trading a little fearful because this setup on BTOG was just absolutely gorgeous. I saw this resistance at 105. 120 was going to be the main risk. We saw the big upper shadow there. Day two leg up. I mean, there's multiple variables that are lining up. As MG would say, letting the trades come to us. And this one really did come to us. And I still got scared out. And I literally stopped out at like 94.5 cents. Stopped out well. Wanted to re-enter it up and over $1. Didn't happen. But yeah, what I'm looking for on each of these tickers is, again, like, 30, 40, $50 a ticker. And I had a $300 day on Monday doing that, when most of the tickers work out. Now, granted, that's not always going to happen, but I can think clearly. When the sizing is proper, I can think clearly on it. I'll say this, like when I'm up on the sizing, and that's just relative based on the trading account, if I'm significantly in something, it's going to affect the judgment and bias on the ticker. I'm going to really desire that it works, and that's going to affect how I trade it, where I may not where I may adjust risk parameters and that sort of thing. Yeah, UPXI, James got scared out. That thing, that was amazing. Just double. You know what? That move just, you don't see this kind of a move often. I mean, it just bounced and went straight up, double topping up here at 908. So you don't see that straight up kind of a move very often. It popped up a point that quick after selling off entirely. Yeah, MG, if you lose 100, you're done for the day. Yeah, the 5K is kind of tough to do because of that. So yeah, there were actually some good setups today. It was slower. MEIP was one that sold off all day too. It was a little slower, but all in all, there were some good setups. I didn't capitalize on them. It is what it is. There's probably 3, 4. And then I saw a lot of traders banking on SBET. SBET today on the short side. Yeah, this thing was looking pretty good. $40, and then it sold off over 10 points off the high today. SBET, so saw a lot of traders, doing fairly well on that one. But you know how it is on social media land. So OPEN is a Wall Street Bets play I'm going to be monitoring come Monday. OPEN, a lot of it's got a little short interest. I think it was like 10%. I'd have to relook. A little bit of a short interest, but this one 50 cents about a week ago, up to 265. They're trying to squeeze some shorts out there. Yeah, you're sticking around a little bit too long. IXHL actually held up here. 6.6. Look at the high, 6.666. That might be a good indication to stay away from it. It's got too many sixes in it. But yeah, that's that. Need to leave around 11 to 12. Always up by 11, and then keep trading. Yeah, at a certain point, look, it's really just, it's not a problem to stay if we're getting some good opportunities popping up on the scans. But that comes with time. It's the trading philosophy, the gut, combined experience over time that's saying, are there good setups or are there not? Like, is today a day to just pack it up? Because at 11, I was ready to keep trading. I was wanting to trade. I'm like, dude, if I shut this down, I gotta wait till Monday. I really wanted to trade, and still, I want to trade right now. All right, MG sent the charts over. Let me see. Let me take a look. AveryDayTrading@gmail.com. Haven't got them quite yet. Yeah, but it's mostly mindset. I mean, it's mostly all mindset. It's you got to tap into the market to the point where it's like you know the good setups. You got to know the good setups, but then there comes a point in time where it's all mental. It's all discipline and mental. Yeah, hasn't come through quite yet. Yeah, I'm not seeing it. AveryDayTrading@gmail.com. I'll type it out down here. Could just be taking a second. But yeah, if you can learn to create a state of mind that's unaffected by what the market does, the struggle, in my opinion, is going to cease to exist. You don't really care what. That's my response when people are like, what is this ticker going to do or that ticker going to do? I don't care what it does. I don't care what the ticker does. I know what I'm going to do. You've emailed me before, MG. I've gotten it. Unless that's somebody else. Yeah, I don't care what this ticker, whatever the ticker is. I'm not somebody that has a crystal ball and knows what the ticker is going to do. I know what I'm going to do. I know my reaction to what the ticker is going to do if it does X, Y, and Z. That's what's important. What are you going to do? The best traders, they can't see into the future. What they can see into is exactly what they're going to do, regardless of what the market does. Okay, sending it over now. We will review. Oh, okay. You sent it to my personal email. Yeah, that's fine. All right. All right, so here's MG's chart right here. Why I never answer you back. MG, I always answer you back. Now, sometimes I don't. I always read them. I actually, I had asked you about your risk management on one. And I'm still meaning to read that. My kids distract me. I am very curious on that in the mornings. You sent me a long thought out email, so I am going to get to that. Funded flex. All right, profit target 2,500. Max loss 1,000. You gotta get to 2,500. They're green on that right now. Okay, very good. Green $59. Taking 4 trades, 4 shorts, 0 longs. I like that. Perfect Fall, how are you doing? Good to see you in here. I like to see just the 4 shorts. All right, I like that. And working your way in the profits. Good. Have you noticed anything different with the funded, like orders, executions, anything. Because from my understanding, they don't necessarily. They send like your, I guess, your chart over to risk management, and they may actually not put a lot of traders live yet, for a little while. Maybe after they get their first payout. I don't know. But you're funded, so you can actually get paid. Actually get paid out. So good work on this, on the funded account, working your way to the profits. Excellent job. $500 behind you. Yeah, I'm planning on this coming week. This is 9 trading days that I've put in, and seeing $993 in profit. So I do think next week I can get there by the end of the week. I mean, that's kind of the plan. That's kind of the plan for me. I want to be funded and ready to go into next week, because I put in 9 green days. Actually, the first day was red. First day was red. No, the first day was green. Yeah, just had a few red trades and then red to green move on the account. Typical. Yeah, every day's been green on this account. So 9 green days, $993. So 5 more days. I should be able to get there next week, get funded, and then we'll start getting paid. That's the plan. I just got to keep the mindset of slow and steady wins the race, and not try to swing for it too quick here. And then I'll join you, MG. MG, being funded on 2 accounts. So we got a few funded traders in here that are doing really well. Speaking of traders that are doing really well, Mr. Barron is in the house. So, Barron, I got this. Have you ever had very old Barton? I've never tried it, and I wanted to. I know it's like a cheap Buffalo Trace, and I wanted to give it a shot. And they had it. It's allocated in North Carolina, but they had some, giving it a shot, and it's really peppery. It's like extremely peppery. The Buffalo Trace is like all candy apple. This is much different, to me at least. MG got emotional and scared to lose more. Got it. Number 1 rule is to get in after you. Thanks. I like to start them early. Start them early, scale in. Although, I really haven't been given these tickers much. Wiggle room on the loss side. You can tell, like, the pullbacks are kind of mild. I mean, I don't give them much room. Right here, the high was 680, and I pulled back to like 570. So pulled back a little over $100. But that's about the wiggle room I'm going to give them. I've been given my losses like real small. Like if they're invalidated, 30, 40, $50. That's it. I give them. I keep it moving. So the winners, 30, 40, 50, and I mean, well, here's all the stats. Average profit 45, average loss 35. Win rate for me is 62%, which is pretty good. I mean, the strategy I'm trading should be a little higher than that, but I've been taking, probably some L's that I shouldn't be. I'm so focused on losing well, sometimes I stop out too much. Yeah, I like the bottle. The bottle's nice looking. Very old Barton. Buffalo Trace is good, yeah. Hard to find in PA. Well, if you ever come down south, I can get it for you. It's actually been hitting a lot of stores here lately. Good old BT. Yeah, let's open it up for Q&A. Let's get some questions going. Just kicking back all Green Week, celebrating, going over. We're going over some charts too, Baron. If you have any charts or what your equity curve looks like and want to send it over, we're going over everything. MG and James have both sent those in. So anybody else, I'm happy to go over them. What's the difference with trading small account and big account for you? That's such a good question, and there's a lot to unpack there. Touch the wood. Yes, with a big account, not hardly really, not really having a red day. Haven't had a red day so far. Wow, that's so true. I haven't been counting. I literally have had 9 green days back to back. Yeah, all these have been green days. Uh, 9 green days, dude. All right. 9 green days back to back. All right. Yeah, the main thing, MG, with the large account, and I knew I would trade better with a large account. And I need to tap into this a little bit more. But the main thing for me, I think that I'm finding success with is I feel like I don't have to. I don't have to be green on every trade. That's honestly a big part of it. I don't know. You guys tell me. I see Emmanuel in here with his 50K funded. Let me know what you think about that. I think that's a big thing for me. Is when I have $1,000 account, I like psychologically, I don't feel like I can take losses. There's just no room. There's no margin for error, and so it affects the trade quite a bit. With the 25K account, I'm trading this like it's $1,000 account, and I made $1,000 in 9 days. I'm trading this like it's a small account because it really is. You have $1,000 drawdown, but I think I'm finding a lot of success here because I'm still trading small, $30, $40, $50 wins. And I'm trading the series of trades that I teach. I'm trading a lot of different tickers, and it gives me the buying power for that, MG. It gives me the buying power to take the hangovers at the start of the day. Normally there's a few, so I can, and I need to capitalize on this more, but I'm able to be in like 3, 4, 5 tickers at a given time and never marrying one ticker. Like $1,000 account, I don't have enough buying power to be doing what I'm doing. With a $25,000 account, I can trade the strategy that I know ultimately benefits me, and that is being involved in multiple trades at once and not marrying any of them. I think ultimately that's what it is. I don't feel the pressure to have to make money on, and I'm trading this exactly like I would a 25,000 account. I hope you guys realize that I'm taking this really seriously, with the proper sizing that I'm putting on here. So hopefully that answers your question. I think it helps me to think in probabilities. It's not instead of a trade by trade basis, manage my expectations more in a positive way. Take the edge, accept the risk, and move on to the next trade. Just move on to the next trade. I'm like easily can move on to the next trade with this because I feel the wiggle room. I don't feel the pressure to have to make money on this trade. All right, Emmanuel, that was the long-winded answer to that. And Emmanuel, I'm sorry I didn't read the rest of that comment. Went 500 in the red today. It's still easy to have red days regardless of the account. I know your max risk is $70, $75 a trade. So what happened? I mean, you just take hit after hit on Nvidia pretty much sold off. You just trade Nvidia and Tesla, right? Tesla was quite choppy. But there's a psychological reason behind. Sometimes you're gonna have red days, and you're just gonna take losses like 75 back to back to back to back. It happens. Sometimes that's just gonna happen with the account. Baron, once we hit 1 million, we'll have to do a meet and greet. Oh man, it'd be so fun hanging out with you guys. Yeah, the million. Yeah, I'm gonna have to. I hit 500,000 in that competition. The million. I think I'll hit 1 million in trading profits at some point in my life. I just don't know if it's gonna be how some of these kids do it that may or may not be doing it. Because I'm a pretty defensive trader. I guess as I size up and have a larger account, it could happen. I see myself making modest salary right now. If I'm making $1,000 in 9 days, I can see myself making a modest salary, but 1 million is putting a lot of risk out there too. Maybe I get to that at some point. My mentor was doing $10,000 a day was more or less his quota, and he would be trading pretty much the strategy I trade. It's like, or I'd be trading the strategy he trades, essentially, where it's you size into these euphoric moves up towards resistance. Maybe if I have the $250,000 account, I can really size into these slow and steady. And I think at some point can probably push $1,000 days. We'll get there. $1,000 days. How much is that a month? 5, 10, 20,000 a month. 240,000 a year. Even then that's going to take 4 or 5 years. It'll be like an elderly meet and greet. Yeah, probably with more money, Muhammad. Oh, Musk had a tweet and you didn't know about it for Tesla? God, it's like the tweet market, dude. That's what's annoying with a lot of these plays. Yeah, you just keeping your eyes on what Trump is tweeting, what Elon Musk is tweeting. There's a lot going on. Michelle, moving on to trade the pool. You're lost. Don't be lost. Now I'm gonna have both accounts open. I just wanted a larger account to trade, so I'm trying to. A couple guys recommended it, Michelle, and I'm trying it out. So far, so good. About $500 away from being funded with a $25,000 account. So what the plan is for me, I'm gonna take the profits I generate over here and fund the C Pro account. So I'm gonna have multiple shops open. I think it's the proper way to do this. The reason I say that is because even today, there was a ticker. I took it off my watch list. I think it's like MGRX. Is that what it was? MGRX? One of these plays. I think it was something like this MGRX. It was a different ticker, but I don't recall which one. WGRX. Okay, WGRX. It was this one, Michelle, that wasn't available to trade on Trade the Pull. And then Perfect Fall, I believe, pointed out that it was cheap to locate on CPRO. And we were looking at it on this spike, this fake out breakout up towards 174. So I really wanted to hit this, but couldn't. So that's why I think it's good to have shop open at multiple brokers. You can maximize the plays. If one ticker's not available, one broker, you'll have it at the next. So I think if you consider yourself a professional in this space, I think it's a good idea to open up shop multiple places. Emmanuel, juggling both can be difficult because you're working your job and trading as well. Yeah, I'm sorry about the red day. That's tough. I'm trying to get good at juggling both. Yeah, especially not being able to keep your eyes on, with these names, what's being tweeted. The Teslas, I feel like you gotta have like Elon Musk's Twitter feed just up, so you know what the heck is going on. What can you trade on Trade the Pull? Are you restricted or free? Yeah, you can trade whatever. I mean, you can trade whatever you want, Michelle. You can short anything. That's why I fell in love with it. I don't have to locate anything. Everything I want to short, ETB. ETB. That's the beauty of it. So, now, I don't entirely know. I mean, for those that are actually funded, I really am curious as to how that's going to work. For those that are actually funded, I'm curious as to how it's going to work for some of these names that may not be ETB, because on the eval, everything's ETB. But when you're funded, I'm not sure that's going to be the case. Even the CYCC today, very expensive across the board with a lot of different brokers. Very expensive to short this. So I'm curious how that's going to look. But yeah, I think, my trading style generally is better for the larger accounts because of that. Because of the having the margin for error a bit, being able to be involved in a lot of different tickers, so I'm not tunneling in on one individual. Taking the A+ setups, but not marrying the one, being involved in multiples. And the ones that are working, allowing them to work out. And the ones that aren't, cutting them off. That's the whole idea for me. You can trade the same as the eval once funded. Yeah, but I'm talking like Emmanuel, I'm talking like really funded. I'm not entirely, I don't know for certain if you're, the risk management team just looks at every individual trader and decides whether they're actually putting in the 25, K or not. But yeah, I recognize once you're funded, you can still probably trade the same as the eval. But I think it's a different world out there when you're really funded, and you're trading these low float tickers that are pumping up and shorting them. Like, okay, these shares are expensive to locate. You got to locate them. And again, I could be wrong on that, so we'll see. We'll see how it looks. But yeah, once funded, you're having no problem still with ETB across the board. So, I love that about it. I mean, I absolutely love it. That is my love language. Day trading love language. Being able to short anything I want. No restrictions. Not having to like go over to the stock locate, window and seeing, how much does this one cost? How much does that one cost? No, everything costs nil. But yeah, we've already gone over some good stuff, guys. Let me know if you guys have any questions at all. But guys, we got to. I think what's helped me have these 9 green days back to back has been really the expectations. You got to change the expectations. What does that mean? Well, traders have expectations when they get involved with something. They think it's got to work because I'm involved with it. You got to have zero expectations in these trades. Say, create that state of mind. Create the state of mind that's unaffected by what the market does. You know exactly what you're going to do regardless of what this ticker does. You're in control. You're the bird on the branch. You trust your wings. You don't trust the branch. You trust your wings. I know what I'm going to do if this branch breaks, if this ticker doesn't do what I want it to do, if it invalidates, if this ticker invalidates. And that's kind of how I look at a lot of these when I'm in them. So what's the theory when I get involved with this? For example, today I didn't entirely like this BZAI much at all because I felt like I was chasing it down. But this morning, everything felt kind of chasey. So I traded this bear flag. I took the trade, a little smaller sizing because I felt like I was, way off of the highs. It kind of formed a head and shoulders here in pre-market, 7 being the head, neckline about $6. Actually, a really nice looking head and shoulders pattern. Yeah, so I took this bear flag. Didn't entirely love it, but this morning I was just taking, what I could get. And a lot of these just had continuation and didn't provide another entry to get involved with it. So pretty much know your exit before you even take your entry. Know where I'm going to get out of this, predefine it, embrace it, and accept it, and have zero expectations. So what was the invalidation here? Essentially, it was heavy on this bottom trend on the bear flag that was creating lower highs. And I'm like, I need it to crack here. It's getting heavy. I need it to crack. If it starts popping back up towards 475, 480, 490, then I'm gonna be out of it. It's invalidated at that point for me. If it invalidates against your theory, then you need to get out of it. That's the whole idea. You need to be done with it. But a lot of traders, their ego trades for them. So their ego is in the driver's seat trading for them, rather than the discipline. So everybody thinks that they're a genie and they have a crystal ball that can see into the future. But the best traders out there, they don't see into the future. They see that what they know is what they're going to do, regardless of what the market does. So I can't stand it's like it's a trading pet peeve of mine when I hear people, they think that they're some trading guru and know what the future holds. They got the magic crystal balls. They may have a couple crystal balls. Maybe they do have. That's a tangent. We're going to keep this PG in here. Maybe they have a couple crystal balls, but they can't see into the future. They don't know what's going to happen. They're trying to sell a chat room. That's ultimately what they're trying to do, because traders, there's a lot of guys out there who don't necessarily want to be traders. They want to be told what to trade. They don't want to learn how to trade. So there's a difference. Do you want to learn how to trade, or do you want to be told what to trade? Do you want your equity curve to look like this? Where we're slowly but surely going straight up? Or do you want it to look like, random trading is going to equal random results. So random trading, random sizing, it's just going to be up, and down, like, again, PG. But, yeah, stripper reference coming to my head. That's what it's going to look like. Random trading equals random results every single time. Every time. All right, let me catch up on chat a little bit. Yeah, they have hotkeys to get in and out. I'm on the web-based platform, so I don't entirely... They haven't been working for me because their application works entirely for the Windows-based. I'm on Mac. Naman in the building, learning. I love that edit, Naman. Naman's been editing some videos for me. I love that edit you sent over today. That was excellent. Can't wait for the next ones. I'm excited for you that you're learning. Yeah, Trade the Pool's a good place to start. I'm glad you're learning. This is good. We do some Friday night live streams where we hang out, go over the week. It's been a good week, so we're just reviewing it. Good or bad, we review it, Naman. Good or bad, but trading, good times in here. Glad to have you part of the green team. Naman's part of the green team. James, identifying a fear. Okay, so at times I don't want to get out of a trade because I feel like I'm going to miss out on some of the profit. We could go over a whole lesson on these. Okay, so you're identifying a fear. There's 4 trading fears in trading, and you really need to learn, you got to figure out like which trading fear is yours. All right, so hear them out. Trading fear number 1, the fear, well, the one that most traders struggle with the most is the fear of missing out. So when traders get started, Naman, this is for you if you're just now getting started with trading. Everyone sees a ticker going straight up, and they have a fear of missing out. They don't want to miss out on the move, and so they buy high. They buy high and hope higher. Buy high and hope higher. Not a good strategy to implement. That's why at this point in my trading journey, I short into the those guys that are buying high, hoping higher. You don't want to do that. So that's the fear of missing out, the fear of being wrong, the fear of losing money, and the fear of leaving profits on the table. Those are the 4 trading fears. Identify what yours is. That way you can better equip yourself. I mean, trading is all interior. You gotta know the psychological aspect of trading. It's because it's all the mind. It's all mental. It's all a mental game. Feel like you're gonna miss. Don't want to get out because I feel like I'll miss out on some of the profits. Yeah, there's a fear of leaving profits on the table. That's what that is. That's James, as a sign of greed. That's what that is. So the saying goes, pigs get fat and hogs get slaughtered. So James, don't be a hog, okay? Got to be a pig. That means being a pig means what? It means take profits, but don't be so greedy that you're wanting to turn into a hog. Be greedy enough where you're taking money off the table. But that's why I teach leaving leftover positions. So scale in and scale out, essentially. I like to scale into these plays rather than I have to have the perfect entry, the perfect single entry. That's hard to do. So what's better is let's scale into the trade. So take your 1,000 share position and maybe break it apart. So you'll do like 250, 250, 500. So break it apart. I like to do that when I'm sizing into a short as something's going into euphoria. So shorting into it, and then as it sells off, like we'll go over like this CYCC today. CYCC today, this is great. So size into it up towards resistance. We identified resistance on the daily from Tuesday up towards 1920. That was the idea to short into. So shorting into this play up there, and then scaling in, and then scaling out profits along the way. So as this thing's dropping from 18 down to 13, you're just sizing out, taking money, taking profits along the way. Emmanuel, I went against today what I always preach, always use a stop loss. 2 trades cost me. Yeah, that sounded like you lost a little bit more than what you had gone over the other day, the $75 per trade. Yeah, I mean, we do that often, don't we? We go against what we say we're gonna do. I've done it plenty of times, and it's so aggravating. You really need to lose though, because let's say you were to be rewarded for that bad behavior. I mean, you're just gonna keep going down that bad road. You're gonna keep going down that road until you experience a day like today. You know that's ultimately what's gonna happen. I've done it before to learn the wrong lesson by being rewarded, for breaking the rule and adjusting my risk parameters mid trade, and then I keep doing that, and it ends up bad at some point. Buy high, sell higher is a strategy for blowing the account only. Yep, MG, buying high, hoping higher, selling higher. And what normally happens, when traders are getting started out, there's so much to it. There's so much to it. You'll buy high, hope higher. You really don't have risk in mind. These guys don't have risk in mind. They don't predefine the risk prior to entering the trade, so they're just spinning the wheel for profit. The ticker elevators down, which the green team were a part of that elevator down on the short side. That is my favorite move. I love being involved. I hate the stairs up. Longs take the stairs up, shorts take the elevator down. So we take the elevator down. So much fun. But the longs, unfortunately, get involved in the paralysis by analysis. They go deer in headlights. They're involved in this name, up towards 18, like this CYCC. And then it just elevators down very quick, snaps to 17, 16, 15. Deer in headlights, capitulation. They're holding and hoping, maybe even sizing into the position. They were just looking for a little scalp, and now they're a long-term investor in a company they know nothing about. Well, now they look into the company and they're like, let me find out if this is a good ticker to be involved with on the, as far as a long-term investment goes. So that's the story. That's what generally happens. It's a tale as old as time. It's a rinse and repeat story. It's gonna happen. If you're new, it's gonna happen. You're gonna blow up an account doing this. Pretty much most of them do. So guys, this has been a good Friday night live stream. Gone over a lot tonight. I'm kicking back for a little bit. I'm going to just flip through some tickers like I do. I'm just always flipping through tickers. This is essentially my hobby. Somebody asked me the other day, what is my hobby? And I'm like, don't ask me these trick questions. I don't know what my hobby is. I'm a chart master 5000. I flip through tickers. This is what I do. Otherwise, I got a family, and there's not much time to have hobbies. Every time you break a rule, well, it's good that you have some rules, good rules on the account. Then you lose. And so, what's been your rule, James? It's been not trading pre-market, and you didn't trade today. And guess what? Well, I mean, today was kind of break even for you, but could have been worse if you would have broke that rule. You lost every day doing that. Besides Friday, the day I didn't trade pre-market. Michelle, I use TD Ameritrade. Here it is. I've always used it. I've used it since 2016. I can never really get off of it. Yeah, I've always used TD Ameritrade for charting. It's quick, fast. They got scanners on there as well. I can flip through tickers. Like look at how I've been doing this for 10 years, flipping through tickers like this. I mean, I can go from ticker to ticker in less than a second. Most platforms are not that quick. I mean, of course, DOS is. But yeah, guys, this is let me know if there's anything else you guys got on the night. This is where I'm at on the 25,000 account. Profit target 1,500. I'm about 1,000 out of 1,500 on it. Got about 500 left to go. We're going to get there this coming week. Going to keep the equity curve looking like this. I'm going to start Monday off by taking probably a few hangover trades. We're going to be trading. I got a lot on the watch list I'm taking a look at. CRSP, potential hangover. ATAI, potential hangover. OPEN. Yeah, I got a lot to review over the weekend. BTOG, man, a couple misses that just bugged me so much today. But yeah, well, guys, focus on what? Focus not on the strategy. Focus on the discipline that's going to unlock that strategy. Risk management to protect it, consistency to compound it. So, guys, anything else you'd like to add before we wrap up the Friday night live stream? Been going for an hour. I think it's been a good one. James, I think I just traded when you start and ended when you end. I would be very profitable. So I overtrade a lot. Yeah, that's what the chart looked like. Looks like you're overtrading a bit. Sizing's inconsistent. So you got to dial in. You do need to dial in like what you're trading. Less is more sometimes, right? The KISS principle, keep it simple, stupid. So less can be more. Michelle, how's charting and indicators on CMEG? I mean, they have all the ones I would use. Charting and indicators. I mean, mainly I keep that simple too. VWAP and then some moving averages, but they have all that. No, I'm not much of a soccer fan. I'll have to look up R9. Hopefully he's a good-looking gentleman. But yeah, guys, I mean, keep the trading from being random. Keep your sizing from being random. Consistent trading is what equals consistent results. So next week, step into the day. I stepped into the day every single day this week. This is what I've attributed to being green the last 9 days in a row. I've stepped in every single day and said to myself, I know what I'm going to do. Regardless of what this market does, I'm taking the edge when it presents itself. But the market has no power over me. I'm just going to react. I'm not predicting anything. I'm reacting to what's happening, the action that's happening. And regardless of what it does, I'm going to know exactly where I'm stopping out at. Otherwise, on the reward sides where I'm flexible and I take profits along the way. Rigid with the rules, flexible with the profit expectations. All right, traders. So that is wrapping up our Friday night live stream. I think it's a good one. Preparing some of us, to start the week next week. It's a lot of psychology. That's kind of the bread and butter for me. I like to focus psychology. I mean, that's really the most important thing in trading, in my opinion. Because really emotions control the market. If you think about it, I mean, emotions mainly control the market. So emotions have a lot to do with psychology. And you're at a battle against three things: the market, other traders, and yourself. And you are the most important of those three. So let's focus on bettering ourselves. You're becoming the trader you're going to one day be. So let's put steps in the right direction. Traders, I appreciate you guys. Email if there are any questions, averydaytrading@gmail.com. Otherwise, have a great weekend. We will see you guys Monday morning.